please consult with a qualified professional for any investment or financial advice. Most of us know what a mortgage is, but the path to homeownership features other costs that don't get as much attention. Today, we're unpacking those overlooked expenses to understand the role they play in buying a home. Then, we sit down with an expert to get the inside scoop on what could really affect home buyers when searching for financing. All this and more today on Pay That Bill. This is Pay That Bill, a podcast from your friends at Virginia Credit Union, here to help you pay your bills. I'm Sabrina, a financial educator here at the credit union, and today I'm here with Cherry.
Hi, Sabrina.
Hey, Cherry. How are you today?
I'm great.
We usually have you on our expert session of the show, so we're really excited to have you here on the first segment of our podcast. And as usual, we always ask, what bill did you pay?
I paid my mortgage.
Okay.
And sadly, my mortgage actually went up by $300.
That is a lot.
Can you believe that?
That is a lot.
I was crying.
I would cry as well. So how does one have a $300 increase in their mortgage?
Yeah, so we have a conventional 30-year mortgage with a set interest rate. So the principal, the interest is the same each and every month. However, what is not the same is the escrow account that includes your taxes and insurance. Well, recently our house got reassessed, and the value of the house increased, which is awesome.
That's great for equity.
However, it increased our taxes as well.
Okay.
So because of that, we had to put more into escrow. And it included that $300.
Wow. And we're going to talk about that today. There are a lot of costs when it comes to home ownership, and we get a lot of questions about home buying. And if you have questions about home buying or about anything, you can send them to us at PayThatBill@VACU.org. So we received this question: why are there so many costs beyond the price tag of buying a house? And we wanted to dig into that question since it did come in from our audience. We also have a lot of resources about first-time home buying. So if you want to check it out at vacu.org, or we have a link in the description of today's episode. But for this conversation, we're going to go on a home buying journey together, Cherry.
Sounds good.
Imagine that we are pre-approved. We know our budget for the home that we're going to buy. We've got our mortgage loan officer all set. We've got our realtor ready to go, and we're perusing the listings. As a home buyer, in that process, what is the first cost we should be preparing ourselves for?
The first cost would be your earnest money deposit, sometimes referred to as EMD. And this cost can range depending on the cost of the house that you're getting ready to purchase. So, for example, you are getting ready to buy a $300,000 house, and you want to make an offer on the house. And in order for the seller to take you seriously, you give them money, the earnest money deposit, to show them that you are a serious buyer. And that can range from 3 to 5% or even more. So at a $300,000 cost or a $300,000 house, you might be looking at around $3,000 to $9,000 of an earnest money deposit.
Yeah, and you know, we both have gone through the home buying process. My husband and I built a home probably like 3 years ago, and we went through like the traditional neighborhood builder, and we too had to put down an earnest money deposit. This was to show the home buyer, not the home buyer, the builder, that we are serious about building the house so that they don't sell the lot to someone else. And we did. We had to make that. I think they required about 25% down.
Wow,
maybe not quite that much. I think it was like maybe 5%. But we did have to put a significant amount of money down to show that we are ready to move forth with the contract. So
But what's great about that money is that you don't lose it.
Right.
It's not off in la la land. It actually can be applied to your closing costs as well. So you put $5,000 down. That could take down your closing costs when you go to close on the house.
Yeah, and even, I've worked in the credit union industry for a little while, and in the branches, and as a loan officer, I've taken in loan applications for mortgages, and I thought I knew it all. And going through that process myself, hearing about the earnest money deposit initially, I'm like, we have to pay that and a down payment and that. So, but knowing that that was going to give us some credit down the line, one, I was glad we were a little bit more prepared for, but it's not necessarily an additional cost, but it is something that you want to be sure you have upfront and ready to go. So if you've got that deposit down, you've found the house that you are hoping to buy, and the seller of the home has accepted your earnest money deposit, what is the next step, or what is the next cost that the home buyers should be prepared for?
So the next cost can actually vary depending on what you're worried about. But what we would want to focus in on are the inspections of the home.
Okay.
So the inspection is going to give you peace of mind to make sure that what you're purchasing is okay. Like, it's not about to break down the HVAC, or the roof's going to leak on you, or the foundation is faulty. An inspection is very important as you're purchasing that home to give you that peace of mind. There are all sorts of inspections that can go along with the baseline inspection as well that you want to consider, such as termite inspection or radon inspection. But it's all about making sure that you are covered as the buyer of that home, and give you some peace of mind around that.
Yeah, home buying or purchasing a home is the largest purchase that many people will make. And we want to make sure that we are putting a good foot forward in that investment. We talk about car buying in some of our content, and if you're buying a pre-owned vehicle, most people will take it to the mechanic to make sure that it's safe to be on the road. We should kind of be thinking about that when we're thinking about the home that we're going to be living in.
Yes.
Sorry. No, I know that a lot of the times, especially when there is a competitive market, during the pandemic, we definitely saw this come down the line, where many home buyers opted out of inspection.
Okay. Yes.
So in your expertise, one, we talked about having peace of mind, but what are maybe some of the pros and the cons of waiving that inspection?
So in a very competitive home buying market, that is something that does come up. And it might be one of the first things to go when you're making an offer on the house, because that is very appealing to the seller.
Right.
However, you are taking risk if you are including that within your proposal. So one of the things you can also do is, you're going to waive that you will not hold the seller accountable for what you have found in the inspection, but that you want that inspection for your own peace of mind, and you go ahead and do that. But it's really about making sure that your investment is being protected.
Right. And it's helpful, when we went through our process, we did not initially go into building. We were trying to buy a pre-existing home, but we bought during that COVID pandemic housing market situation. And we had a really great realtor with us. And, even before we got to the inspection piece, we were looking at things. We were, kind of pre-assessing, is this going to be worth our investment, or is this going to be a risk down the line?
Yeah. Another thing that you want to consider is the appraisal fee. So the appraisal is something that will tell you how much your house is actually worth. Now, if you're using a lender to purchase the home, the lender is going to make you do an appraisal fee to ensure that they're lending you money and that the house is worth what they are lending as well. So that cost can be upfront, or it could be later on that you roll that into your closing costs as well. But it is a cost that is going to come up.
So along this journey, we've got our earnest money deposit down. We have our inspection all good to go. We've got the letter is clear. We can move forward. The next big step for many home buyers in this process is now getting to closing,
Exciting time.
Which is the exciting part. You get to go to the lawyer's office and sign what feels like thousands of pieces of paper.
Very true.
I think when we went through ours, I'm like, is there any ink left in this pen? My hand is cramping. But you get your keys, and you are officially a homeowner.
Yes.
But on those documents, there is a page that says closing costs. And it's costs for a reason, because it's multiple things. And I think it's a huge term in the home buying industry, where that's something that's going to have to come down the line. But what exactly is closing cost, and why it seems like it's a lot, or a hefty amount that you have to pay at the end of that transaction.
So when you close on a house, it's kind of like tying that bow on it, right? With all the legal and the money transactions going through. So everything can actually be rolled up into that one little area. So it's important that your lender, as you're going through this process, goes over these things. They will have a complete breakdown of where your money is going. If there's a loan origination fee, your appraisal, maybe you deferred that to closing, your down payment, and then also if you got or received any rebates, backs, because there are first-time home buyers programs, there are all sorts of things. Maybe you negotiated some things within the purchase of that house. So all of that can be seen when you are closing.
And actually, the lender that we worked for, we were able to see some of those disclosures ahead of closing so we can make sure that we have all of the things ready to go. We knew who to send the money to and send it to them safely. So when we think about the purchase, you know, it's huge. We all know that, and it's quite the investment, but it's also technically like a legal transaction.
Yes, and you have lawyer fees.
Yes. So we've got the law office that we're sitting there. We have to pay them as well. But there is the exchange of property from one hand to another.
Yes, the title costs.
There's titles. There's the recording fees for the courthouse. So it's not just the loan part of the transaction. There is a lot of other things that go into it altogether. But there's another cost, and we hinted at it at the beginning of the episode. Right. We've got escrow, and sometimes we have to pay a little bit of that up front at closing. Yeah. So, you know, we've gone through the home buying process. We've got the keys. We're ready to go. We've got our monthly mortgage payment, which is typically like principal and interest. But there's a line item that's called escrow. And yours just went up.
Yes.
So tell us about what that is and why that's a factor in this process.
So the escrow account, usually they like to have around 6 months of cushion within that escrow account. So they might have you put more upfront at closing to bank and put that money away. So when those payments do come up, they are getting paid, and there's, you know, some insurance around that for the lender, for you know, who you're paying those taxes to as well. But the escrow includes your taxes and insurance. The insurance is going to protect yourself and the lender in case something happens to where your house burns down, there's a tree that fell. Any type of natural disaster, you want to make sure that you are covered for. So you want to be clear within that insurance policy, because insurance policy can cover different things.
Right.
Even things like flood insurance. That's not necessarily a given within a homeowner's insurance policy.
Right.
It can be an add-on. So you want to be very clear when you're getting your homeowner's insurance what exactly you're purchasing and what it will cover. But again, it can go up, that escrow fee can go up based upon what your house is worth. And then also, the more your house is worth, your insurance can go up as well, because it's got to cover what your house is worth.
Yeah, we talked about that here recently with my parents. They had some updates to their home, and I reminded them, I'm like, you might want to make sure that your policy is covering those updates because, yes, it might increase your monthly mortgage payment, but unfortunately, you know, especially here in Virginia, we get really bad storms, and sometimes we can have those rough patches where there can be damage done to the home, and we want to make sure that we are protecting that investment. But as you mentioned earlier, the value. We love when our investment increases and the equity in our home builds, but sometimes that can affect the taxes that we have to pay on that. As I mentioned, when we built our home, that first initial assessment was based upon a lot of dirt, if you will, and maybe some resemblance of a structure. But once the home was finalized and they reassessed it, it was obviously worth more than what they originally,
which is good,
which is great. But when we closed, at about 6 months into it, we got a letter from the county saying, you need to pay us more taxes.
Yeah. That's painful, isn't it?
It is painful because it was not a cheap amount, but we were able to kind of work with our escrow account through our mortgage company and get that paid. But that was an unexpected expense.
Right.
So if you are a homeowner and you are not prepared for those inflations, we want to make sure that we can put ourselves in the best foot forward, because as you are experiencing now, that payment can go up, right?
Yeah. Another thing to consider is the HOA.
Yes.
Some might be due at closing. It depends on the HOA, but if you move into that sort of neighborhood, that's something you want to factor into your budget, because that is a monthly, yearly, quarterly payment that's going to come out, and you've got to make sure that you have the cushion for it.
Absolutely. And with HOAs, obviously, the more amenities and things like that you have in a community can really drive that number up. But sometimes it's a little confusing with HOA because, for example, we paid our initial fee at closing, but that is our responsibility to make sure that we pay that. And it is a must pay. It's not an optional.
Right.
There can be legal ramifications if it's not paid.
Yeah.
If you want to do a modification on the home, sometimes they make you pay that or make sure you're current before you can do those things. But when it comes to home affordability, it really does play into it.
And HOA fees can increase as well.
Ours has increased.
Yes, I just got a bill or a survey in the mail talking about, do we want to do this? If we do this, then our HOA is going to go up by $10 next year. So everyone had to vote. So it's important to be in the know about what is happening in the neighborhood.
Yes, I am facing that right now with our increases, and hoping I don't get pushed onto the board, but it is a huge factor. One of the neighborhoods that we were looking at, the HOA fees were $250 a month, but it came with a pool, a clubhouse, all of those things.
So that's something you want to consider when you're purchasing the house in and of itself. Like, what are the HOA fees and what do they cover? Are they going to meet your lifestyle? We do not have a pool in our neighborhood, but our HOA fee covers lawn maintenance and snow removal. So we don't have to do any of those types of things, which is wonderful for someone my age.
We don't cover that. We don't have much for our HOAs, which is why they're a little bit less than most communities. But it's definitely part of that home buying or home ownership cost that goes on. And speaking of ongoing costs, because it does not end at closing, as a homeowner, there is some things that we have to consider in our budgets. So how can our listeners be best prepared for some of these ongoing costs that go beyond the monthly mortgage payment? And what are they?
Yeah, absolutely. So thinking and planning ahead is really important when we think about home maintenance or ensuring that what we have is going to last. When you are getting ready to purchase the house and you get that inspection, you're going to know how old the HVAC system is. How old is the roof? So keeping those thoughts in mind once you get into the house, if you know that HVAC system is 10 years old, you're going to want to set up maintenance for it in the spring and the fall. You probably want to do that anyways, just to stay on top of it, because the more you can maintain it at the end of the day, it will hopefully last longer. Something else you can think about is creating a savings account specifically for your home maintenance, that it will happen. And whatever breaks down, at least you would have a cushion there to pull from. And it's going to make you feel a little bit more secure.
Yeah, and it's not the matter of like if something's going to happen. There's always going to be something. Even as a new homeowner, we had an electrical issue. So that was something that we had. Thankfully, it was covered with our warranty, but it is something's going to happen, whether it's the HVAC or our appliances. A lot of us don't know that appliances have a lifespan. So when you are walking through the home, and you can negotiate whether you keep the appliances or if you want the seller to take them, but refrigerators, washer and dryers, ovens, stoves, all of those things do cost. And we want to make sure that we have that in our budget as well for replacement when they come.
Yeah, and you mentioned warranty. You can purchase warranties for appliances, for certain things on the house, but you've got to be very invested in what you're purchasing. In other words, you need to read the fine print on the warranty.
Yes.
Because one wrong move and it can make that warranty null and void. So, for example, if you have a warranty on your appliances, they might have a specific contractor that they want you to use and contact if your appliance were to break down. And if you go outside of what they want, it will nullify that contract. So something to consider as you're going through that process.
That's exactly what we were told with our warranty. Even though, whenever we fall outside of that window, they always recommend us to call them first, because if we try to fix something on our own and it does come back to like the builder or the warranty or whatever the case is, they are no longer liable for it.
Yeah.
So one thing that they did do, and I recommend if you are someone that's a little bit more type A, is if you know who your vendors are as far as, the HVAC people or the plumber, write them down, have their phone numbers readily available, have the serial numbers for your appliances ready to go so you can get that ball rolling and get things fixed
absolutely.
rather quickly.
And use your neighbors. Maybe you don't have the warranty, but something breaks down and you need help, or you need to figure out who's not going to rip you off.
Right.
Neighbors are a great resource.
They are. Check out those neighborhood Facebook pages.
Yes.
I actually used mine for a bird removal, and he actually lived up the street. So I'm like, every time he walks by, I'm like, can you get the bird out of our mailbox, please? So that's a really great point.
Yeah.
Now, home buying is complicated. There's so many things that go into the process from top to bottom. And it can feel so daunting, especially if it's the first time going through that process. And right now, I think a lot of us are feeling like it's maybe hard to accomplish with the rising costs of homes in the area. But it's not impossible, right?
Correct. There are wonderful programs out there to help first-time home buyers. If you're a veteran. So this is where a loan officer is going to be very important.
Very important. They will be your realtor, and your loan officer will be your best friend throughout that process. But thankfully, we do here at the credit union have a lot of resources as well. One of them is our friend of the show, Candice.
Candice actually helped me when I went through the home buying process.
Did she really?
And she is wonderful. Yes.
We've worked together in some of our videos on our website. You can check them out at vacu.org. But she's wonderful and a wealth of knowledge, and she's going to sit down with us to kind of go over what is out there if you are trying to track on this home buying journey, and how we can make it more affordable for ourselves and be as prepared as we can. But before we kick it off to Candice, thank you for sitting down with me, Cherry. This was
so
fun.
Much.
We've been on this journey together, and hopefully we can help some of our listeners achieve that dream as well.
Thank you, Sabrina.
Thank you. Hey there, it's Sabrina, and today I'm here with friend of the show, Candice. Candice, how are you doing?
Good, thank you.
So tell our listeners who you are and a little bit of your history here at Virginia Credit Union.
Thank you so much for having me, Sabrina. My name is Candice Sheeler. I am an area sales manager with Virginia Credit Union Home Loans. I've been in the mortgage industry now for nearly 30 years. I've been with the credit union since 1995. I started as a teller and then worked my way over into the financial pieces of Virginia Credit Union, and I love what I do in the mortgage world.
That's amazing. I also always love a journey through the credit union career story.
Yes.
It's very similar.
Yes.
It feels like realtors are the stars of the show. They're walking you through properties. They're helping you find your dream home. But mortgage loan officers, or MLOs, are really the unsung heroes. For anyone unfamiliar with a mortgage loan officer, what do they do, and how do they help you through the home buying process?
Well, thank you for giving them a shout out, because sometimes it does feel like we are the unsung heroes, but we do have a very important role. The realtors are the ones, of course, as you mentioned, that are going to help you secure the property, help you negotiate, but the loan officers are the ones that handle all the finances. I mean, they're kind of the gatekeepers, I guess, so to speak, to getting into the home, right? So the loan officers have a really important job of working with the borrowers many times, months to years before they're ready to qualify for home buying. And they will work with the member through the entire process from beginning to closing on how to finance a home and be their best guide and best resource for that.
You have a wealth of information about financing homes, and now more than ever, it really does feel like to many that home ownership is unobtainable. So what kind of resources are available for folks to help maybe lighten that financial load throughout the home buying process?
Yeah, we really are in somewhat of a home ownership crisis right now in the country in general. And what we have found to be a key to our success at Virginia Credit Union is to be able to offer as many resources as we possibly can to our home buyers. Anything from the education piece, which is a part of what we're doing, all the way up through financing and what that looks like. So we partner with a lot of grant agencies, especially for our first-time home buyers that, have modest income that really need that extra boost to help them get into home ownership. We do have some 100% financing options for first-time home buyers, and we work with subsequent buyers, that maybe have not been in the market for a new mortgage for quite some time, and helping to guide them on what the latest products are and what their best financing terms are going to look like.
Right. There is a lot of things that go into financing a home. Like you mentioned, grant programs, getting qualified, even walking through the process in general can be overwhelming. So based on your experience, when it comes down to purchasing a home, what are some things that people often overlook?
There's a few things that play major factors. And I would say one of the more important factors is credit and what their credit profile looks like. When I talked about, borrowers working with us for months to sometimes years ahead of time, we have worked with borrowers that really had some credit challenges early on in their home buying phase. And we worked closely with them, helping to give them guidance on things that they can look to do on their credit profiles to help bring them to the point that they not only qualify for home ownership, but that they can qualify for better interest rates and better products. That, along with what their income looks like compared to what debt they have, and then what their overall asset picture looks like too. There are a lot of times where I talk to potential first-time home buyers that maybe are renting right now. Maybe they're renting for about $1,200 a month, and the purchase market would put them at a mortgage payment of about $2,000 a month. Sometimes that seems unattainable for people. So we work closely with them up front to say, hey, maybe go ahead and start paying that $2,000. That way the $1,200 is still going to your rent, but the $800 is working in your favor a couple different ways. That $800 can help you get adjusted to making that $2,000 a month payment, but it also can help build a nest egg for your down payment and closing costs.
Right. I love how you mentioned checking your credit is going to be like that first step.
Yeah.
And for those who have never seen their credit reports, annualcreditreport.com is definitely a great place to check.
Yes.
You can do all three of your credit reports there.
Yes.
So what other strategies or insights could you share with our listeners that could make the financing process of home buying just a little bit easier to navigate?
Well, you want to first look at your overall profile, and you want to get in touch with the loan officer as soon as possible. Many times we don't hear from borrowers until they're actually ready to make that step. And then sadly, they're disappointed if we've uncovered some things that still need to be worked on, whether it's their credit, income, or debts. And so working with a loan officer early on can help. We also can help sometimes to refer them over to a qualified realtor that might work best with their particular profile, where they're looking, things of that nature. So it's very important to engage early on.
Yeah, I totally agree. It can be disappointing if you start the process and you start looking and maybe you're looking through the online listings and you find that dream house, and you want to be in the best position to make an offer and make that move. So
right.
That's excellent. So let's dream big for a second. You hear folks talking about purchasing investment properties for additional income. How does that affect the process with working with an MLO, or is it different than purchasing a primary residence?
And that's an incredible question, because we do have a lot of folks that are looking to capitalize on their overall financial wealth. Mm-hmm. Maybe they're trying to set up better funds for their retirement as they build. Maybe they're looking for generational wealth to be able to hand down to their children. So when they're looking at purchasing investment properties, there are a couple things to keep in mind. One, we're going to qualify them with all of their payments. And what I mean by that is if they own their current house, they have a mortgage on it, they have other debts, we're always going to qualify them with all of those payments plus the new house payment. Mm-hmm. Whether or not they're going to have a renter in that house is kind of an unknown when you're buying an investment property, right, because it may be a vacant property that they're going into. And so it's important for the borrower and for the lender to qualify based on all of the payments, right? And so what we do find is a lot of buyers that are going into the rental space are very appreciative for the guidance that we give them on that, because they don't know ahead of that time. Many borrowers that we talk to in that space, this is their first investment property. And then they come back to us subsequently to keep building on that and buying the second or third investment property.
Well, thank you for sharing that knowledge with us. Candice, it definitely has been a great time sitting down talking to you today. I hope our listeners have gained some insights on navigating the home buying process from working with a mortgage loan officer. So I just want to say thank you for sitting down and talking to us and sharing your knowledge and experience with our listeners.
Thank you so much.
Pay That Bill is a podcast designed to entertain and, more importantly, educate. The show is produced by Virginia Credit Union and is developed alongside our award-winning financial education team. We have a library full of free resources available online that can help you on your journey to financial success. If you want to learn more about what we talked about today, check out the links we have in the description of this episode. The information provided in Pay That Bill is for educational and informational purposes only and should not be considered financial advice. While we aim to share helpful insights and general strategies, every listener's financial situation is unique. Please consult with a qualified professional for any investment or financial advice. The host and guests of this podcast are not responsible for any outcomes resulting from actions taken based on the content discussed.